as you all know, and I did flag up at the beginning, there are some celebrations. And one of them, I suppose, is at the heart of our next panel, because we are going to focus on the flourishing Spanish impact investing ecosystem. Okay, so that's really interesting what we're going to have next. I'm going to invite the four speakers and your moderator. So let me just invite, please, from Creas, partner Lara Viada. A warm welcome to you. What have we got? We've got 5 of you, haven't we? So where does Jaime want to sit eventually? Here. Okay, so here, we put Lara here. And thank you, María Ángeles León, founding partner at GSIF. Welcome. You all put yourselves in the most awkward seats, don't you, to get out? Maybe leave the lanyards off if I'm not being a pain, just for the photographs, but that's me. From Q Impact, the managing partner, Pablo Valencia. Where are you? You're there. You are there. Oh, my God. Are you cursing the stairs, the lunch and... You need to get people to carry you up, you know, like a king on their shoulders. And the managing partner at Adara Energy, Alberto Echeverri. Where are you? Hello. Good. Warm welcome to you. You can also remove the lanyard, again, if it speaks to you, if that's all right. And of course, your brilliant moderator, senior investment manager at EIF, Jaime Vera Calonje. So warm welcome to you. Does everybody know him? Do you all know him? Okay.
Some familiar faces, indeed. Yes.
Some familiar faces. What do you do there at EIF? What's your day job?
Well, sourcing, appraising, and following the investments we make in impact investing funds across Europe.
And so, I talked about this as a celebration. I think you're excited. This is quite a record, right?
It is. I'm very excited to be able to have this panel here today and put a spotlight in the Spanish ecosystem. It's been this year a record year for EIF in terms of investments in equity impact investing funds. We will be investing in 4 funds and a total in aggregate of 100 million euros. We are also here in Bilbao, so we thought that it is a very good occasion to put the spotlight in the Spanish ecosystem, not only to showcase the investments that EIF are making this year, but also because each of you are covering a specific segment of the market. So hopefully we get some learnings for the audience here.
And I will just make it easier for you, but I'm sure you will manage it. You might not have time for questions, right? Because it's already squeezed.
It is already squeezed. We'll do our best in managing the time and hopefully give a couple question time for the audience.
You call me back when you're done. I will give you time signals. All right.
Yes. So, thank you for being here. You are leading team members of your organizations. And I would like to get first an idea of how your organization have evolved and how that has shaped your current strategy and your value-add proposition. Perhaps I start with you, Lara, that I have you just next to me. And Lara is managing partner of Creas, as mentioned before. Creas has been in the ecosystem since 2008, is that right? Yes. Setting up first a foundation, but please, can you give us a bit of context of your journey?
Of course, thank you, Jaime. Do I need to say? Yes. Okay, sorry. So thank you. It's a pleasure to be with all of you today. So 2008, so we celebrated just a couple of weeks ago that it's been 15 years in this amazing journey. And like Jaime was saying, we started as a foundation back in the day because impact investing was really Japanese in Spain. Nobody really understood what we were talking about. So we just spent some years doing advocacy and market building until finally in 2012, we launched a very first fund, a pilot fund. We were remembering the other day, at that point, we just wanted to be able to prove in Spain that you could invest in impact companies, in social entrepreneurs with a profit. People didn't really understand, were we talking about philanthropy, what was this? So we were able to prove that, and it was really thank you to the EIF that we were able to launch our first institutional fund. IAIF acting as anchor investor and learning with us along the way. And we launched that in 2018. And I think I also heard David from Norsken saying before that at that time, people didn't believe that there was enough deal flow. It was the same for us. Back in 2018, and María Ángeles was already also there, we were launching a 30 million euro fund, 30, and people were saying that we were crazy, that there wasn't enough deal flow in Spain for such a big fund. Today, 30 million sounds like ridiculous. So we were able to prove that, yes, impact investing is scalable when you actually go deeper into the challenges that you're trying to solve. And now we're launching our third fund, which is a 70 million euro fund, which we did just the first closing in July. And now our goal is to be able to prove two things. One, that impact can create value in the companies if they really take it seriously. And two, that impact investing can deliver true impact also in a more systemic view. Thank you.
I think indeed you are an example of how to build a GP starting from conceptually the foundation and an idea, and then launching a seed pilot vehicle, and then confirming that thesis through now your second institutional fund, right?
True, and you also asked me, sorry that I didn't answer, how has our evolution, right, created our current strategy and what makes our strategy different? So I think what makes us different is that we truly were born from an impact perspective and have been launching vehicles and products that are really thinking on what do impact entrepreneurs need. So right now we've positioned in a niche that we believe is a market gap in the Spanish market and that we want to be able to cover, which is that early growth, that point between venture capital in its points where it's a bit more mature, and also growth companies, to be able to really tailor our solutions to the different sectors where we invest. So in education, you're looking at a very different type of companies, maybe more venture capital, technology-based companies that have high growth potential. But maybe if we look into agriculture and regenerative agriculture, we're looking more into growth deals. So we're trying to cover that middle space of Series A, B, and early growth, more private equity style.
And education, right? That is very interesting. It's not all the funds that we see in impact funds keeping the focus on education, so it's great. María Ángeles. María Ángeles is the founding partner of Global Social Impact, but she's been a great supporter of the market. We'll speak a bit more about that in a little bit. But she set up a foundation that is called Open Value Foundation. Can you also tell us about your journey and your current strategy, how it has been shaped? You also, if I disclose, have been very active in Africa initially, right?
Yeah. So, 5 minutes, huh?
Yeah, I'll give the time, no worries. You can just go ahead.
So from our journey is a little bit similar to Creas because we launched everything from our foundation, but it was 20 years ago more, and it was very related to the Global South. So we wanted to create development in countries that were very poor, and an opportunity on the other hand too. So after so many years doing philanthropy, we bumped into an organization called Acumen, and they were doing what it's called patient capital. And we've lost the patient part of the impact investing. So that's one of the things I want to say. It was 2008 when the Rockefellers just renamed it, and it was impact investing, which was more sexy, easier to fundraise. But we lost a little bit the piece of we're building a new market and we need patient and long-term investment. So after doing it via the foundation again for a lot of years, basically in East Africa, we decided to launch it as a fund because we really wanted to crowd in more capital as we were having more and more opportunities in East Africa, and then we start thinking that maybe we can have opportunities also in Europe, where poverty is described in a different way, but there's still poverty, and more than poverty, the way we are thinking in Africa is like inequality. So we are building a gap that it's growing, and you all know what is going on in Europe, and I don't have to explain anymore. So impact investing for us is trying to close this gap, to help vulnerable people that has less opportunities for work, for income, for education, for everything, to improve their livelihoods. And that's what we decided as a theory of change, and that has been leading us since then. So we normally do our early stage investments from our foundation, where the risk is very high, and then we do more between venture and growth. The fund manager will say more growth in the impact investing fund, because we want it to be an example or a Trojan horse in the traditional financial market. So our fund aims to have a good return and a massive social impact. But we need to show the traditional finance market that there is return in giving opportunities to a huge market that is vulnerable people or people we've left behind in a massive growth in the economies we've been doing lately. So this is our path, and of course, the European Investment Fund has had a humongous role with us, because they were confident enough as being our first fund to invest in us and help us reach our dreams. So that's what we're doing. I don't know if you want me to.
We could keep on, but I was very serious in timing. If I may summarize, for me, you're an example of a GP expanding geographically. You had a very, very insightful and interesting exposure in Africa and understanding of the dimension of the social problems with the foundation as well. You've developed that, and that you've shaped also a strategy that is quite unique, with very high social impact angle in a way. So, but that I would say is an early, I would call early growth, and perhaps we jump into Pablo. Pablo is managing partner at Q Impact. So Q Impact is part of a platform that is called Qualitas. Maybe you can elaborate further with a focus on energy. But brave enough launching this initiative, growth, also very particular type of companies, please.
Thank you, Jaime. So now Q Impact is now an independent company, but our journey started back in 2007 when we created a company called Qualitas Energy in order to develop a global renewable IPP, in order to foster investments in renewables worldwide. So in 10 years, we were very successful. We had a global presence. We had deployed over €1 billion from Australia to US to Europe. So we were a success story. We were one of the leading investors in renewables in Spain at that point in time. And I remember they invited us to participate in a congress called Greening the Islands. So in that congress, we analyzed the electricity system, and specifically focusing on the generation in the islands in Spain and how the electricity was coming still from coal plants and diesel plants. The cost that we paid for this electricity is 3 or 4 times what we would pay it in the peninsula, and this is where the most fragile ecosystems were. So after that Congress, we sat down with my partners, and then we had like 2 main conclusions. Like if we were to invest with a responsible hat, we would start by where the renewables were more needed, in this case, in the islands. However, in our 11 years of history, we prefer to develop in the southwest of Texas and Australia, where there's big plains, developments are fast and low risk. We had no single investments in the islands, that's where most needed. And the second realization was that if we were not to do it, nobody was going to do it. Nobody was going to do the transition in the islands. The governments were not there. The small developers didn't have the resources, or the philanthropy were not there, and the incumbent companies didn't have the incentives because they were collecting 4 times the price of electricity in those super profitable plants, of course. So that moment we said, okay, why don't we launch an initiative, and we set up a semi-philanthropic vehicle in order to try to set up developments to decommission these contaminating plants. And that's how we started. Like, for the first time, we took a decision based on the problem. Where is our investment most needed? And we started by renewables. And then with this philanthropic vehicle, we also applied the same logic that we understood this morning, that is impact-centric logic, like how can we get investment to solve the most pressing social and environmental issues. So that's how we started with the social development goals. How can we help decrease youth unemployment, that in Spain is double the average of the EU? How can we foster rural development? How can we get more social inclusion, bring in formation and employment to people in risk of exclusion, on people with disabilities, and so on. So we started to develop some investments in those areas, and then that was the seed of Q Impact. Then we started to hire a team and developed a strategy that, as opposed to investing in venture, where most of the impact investing world was, we decided to move a little further to companies that were already profitable. But we're not talking about systemic change or explosive growth or transformation, but we're talking about radical solution. Radical is coming from radix, for the root in Latin. So we're companies that are profitable, but are bringing solutions to the root of the problems. And by investing in companies that were profitable, we could help grow and create more value. We could align the impact and the value proposition. And that's how 5 years later, from that seed of pocket of 1 million, now we have, with the help of 120 million under management, 2 vehicles, already 13 investments. And now we're starting to see the first exits demonstrating that we can create value with significant impact, including the development of 5 solar plants hybrided with batteries in the island of Menorca that will reduce emissions by 30%. So it's kind of our journey from climate to social, and from thematic investment to impact, no? And focusing ourselves in growth in SMEs already profitable, but we can help scale and also mitigate problems.
Can you tell us a bit more about the problems you focused specifically? If you elaborate a bit on the social, you do both social and environmental.
So we had the luxury to start with this philanthropic vehicle with total freedom. So we started by the social, the SDGs of Spain and the commitments that they had in front of the European Union. And we realized that Spain was not going to achieve any of them, nor at 2020 nor at 2030. Actually, we met one, which is 2020, the renewable penetration because of the COVID and the lower demand. But for the rest, we were moving in the opposite direction. So we would start for youth unemployment and sat down with a specialist and say what areas we can invest in order to solve this problem. So we ended up investing in vocational training. That is not a very developed market in Spain. And also we developed in a company to foster STEAM vocations, to prepare and to help youth choose the professions of the future, especially in the case of women. So we invested in those type of companies in order to help them scale and to bring the solutions to more kids or more people before they join the labor force. We did the same analysis with people with disabilities, with youth in high risk of exclusion, how I can bring them to education or employment, rural development, we're also present. And in ecological transition, we are in the less developed market, not only in renewables in the islands, but also promoting waste to energy or to bring in solar panels very affordable so we can make it more mainstream in Spain. So very broad mandate, but with that impact-centric approach in the way we originate and the way we manage the companies.
Very particular, yes. So it is very interesting how out of such a large platform and asset manager, ultimately you're spinning out and planting the seed into pure impact investing. Alberto, so Alberto is managing partner of Adara. Adara is a very long-standing venture capital fund manager in Spain, focused in deep tech. 4 vehicles, if not mistaken, under management, and deciding to launch an impact investing fund with a focus on energy transition. Can you tell us about your journey and how you take that decision? And I'll make you some more questions afterwards. Then.
Very good. Well, Thank you for the introduction, Jaime. So as you just highlighted, so Adara has been investing in deep tech for the last 20 years, right? And have been through different cycles. So the explosion of the 2000s, the big downturn, 2008, 2011, then again a very prolific period, then COVID. So we have been through several cycles, and one of the things that we realized is that we needed to strengthen the firm, right? So we needed to have more assets under management in order to counter-cycle the different periods and the different investments. Always focusing deep tech, early stage. The immediate constraint that we had was profitable deep tech early stage funds are reaching a limit around 150 million euros, right? More than 150 million, you see returns declining. I'm speaking under the control of Uli here, who might have very accurate data around this, but this is our observation, right? So we needed to grow the assets under management, but we couldn't grow the existing strategies, right? So we needed to create parallel strategies. We were scratching our head around, so how to do that, and what is the next step in the firm. And one of our LPs, who is a corporate LP, was participating in our previous funds, and they say, listen, we really like what you do, we're learning a lot, but you are something like 20% relevant to me, right? It's the Spanish TSO, it's called Redella, and they explained to us, we really like the way you approach deep tech, how you source deals, how you analyze the deals, how you manage the portfolio, but I'm marginally interested in a video game compression technology, right? Or I'm marginally interested in equipment that will give you very accurate images of your eyes, right? So that's probably not what I'm looking for. So would you be interested in doing something specific to energy, right? And it was, for us, the perfect combination of saying, okay, that's a thematic fund that will increase our assets under management, protect us from potential downturns in the cycles, and at the same time, build on our capabilities, right? So we are just applying the same approach of deep tech in early stage, but just this time specific to energy, right? So the second thing, so we were very happy with that idea, and the second thing was, well, is this really a business, right? Or is this just a nice idea, right? So we went, we look at the market, we confirmed there is an abundant deal flow, right? Not only that, but we confirmed that there is more clean tech investment in Europe than in the US, particularly in the year 2023 and year 2022. Early stage clean tech investment was more significant in Europe than in the US. So we said, okay, second confirmation. But bad news, we're not the only ones, right? So there is a proliferation of funds investing in clean tech today, right? I think you go with a pitch today of an energy startup, and there is a line waiting for you, right? So the next thing was, how do we differentiate ourselves, right? And this is where we leverage, again, this LP, and we say, well, you seem to be interested, right? Are there other LPs, corporate LPs, that might be interested, right? And we start scanning corporate LPs, and we came up with a strong interest, but we also came up with a differentiated strategy where we go to startups and we tell them, yes, our money is the same money as our friends, but guess what? I can give you access to a pool of corporate LPs with who can become potentially your customers, with whom you can get a reference, you can run a pilot, and they're going to validate your technology. And suddenly you bring something that is not just the money, but it's also some strategic component, right? On the other hand, the corporates get not just the financial return, which is always something that will be a must in every venture capital investment, but they also get access to innovation, right? They get access to an international deal flow, they get access to a curated deal flow, they get access to innovators, so to founders, to new business models, to new technologies, and so on. So there is a two-way street that we have created between the founders and the corporate LPs. The corporate that I'm talking about is going to be speaking right after me, so I hope she will maintain the same story.
I think it's very interesting that Well, first, how a deep tech fund manager, launches an impact dedicated activity, how the knowledge in terms of managing portfolios, certainly in capital deployment, but also the technical knowledge is transferred to the impact activity, and that setup where you leverage on corporates and to have let's say boards where there is an exchange of value add between those corporates and the portfolio as well, ultimately. But let's jump into a bit more in detail into the market, the Spanish market. And there's a Spanish, so it's an organization that's called Spain NAP. They've been playing a great role in the ecosystem. They have launched a report that I invite you to read. There, they mentioned that in 2023, there was 1.5 billion euros of assets under management by private investment vehicles. That posed around a 26% of growth compared to the previous year. It is in particular that and that compared to 2020. 2020, there were 323 million, I believe, if I recall correctly. So quite a step. But so can we say that it's flourishing? Is this? Let's find out. Let's pose the question, and maybe I'll start with Lara and perhaps María Ángeles. If you, with the perspective you have since many years in the market, how do you see and what have you this growth and what have been the triggering, perhaps, elements forcing the evolution of it?
So if we think about impact investing as an ecosystem, right, where you have impact entrepreneurs, fund managers, and investors, I think we've seen a huge evolution in the three aspects, right? In terms of entrepreneurs, the type of companies and entrepreneurs that we were looking at back in 2012 and the companies and the level of deal flow that we have today has nothing to do. There's many more impact-oriented companies and led by, this time around, serial entrepreneurs and people that actually have tons of sector expertise or management expertise. So there's definitely an evolution in the deal flow and the level of the companies. In the fund managers, I think we've also evolved. I was actually thinking about it, and when we started, María Ángeles was an investor of us. Pablo co-invested in one of our first companies and advised us, and we learned a lot, and we were hosted in Qualitas. So I think the ecosystem has been, in Spain, has been really an ecosystem of helping each other and working with each other and building it together, right? We built the Spain National Advisory Board together, and I think this is something that makes us special, that transparency, willingness to share and to evolve and learn together will continue. I do think that as investors, there's also a shift from just signaling that impact matters, right? So identifying those impact companies to really taking very seriously how do we add value to the companies, how do we work as investors, how do we make sure that we add value as investors and make the shift and help companies create more value. And even find companies that don't know that they have impact and help them to have a higher impact. And from an investor perspective, I think there, obviously we've grown in assets under management, but not as the same rhythm as other European countries. Right. In Spain, we still see that the public sector has a huge role. So EIF, ICO, or Cofides now in Spain, there's a huge role of leading family offices and high net worth individuals pushing the market. In our case, it's interesting because it's been a lot of women investors that have been the pioneers promoting this, but we still don't see the big corporates. I think Redella and with Adara is quite an exception and a very interesting case. But in France, we see a much larger role of the corporates playing a very important role, of the pension funds playing a very important role with a key regulation that was key to develop the French market, right? So I think the French market is around 10 times the Spanish market, and the institutional investors, insurance companies, and corporates have played a very big role and are still, hopefully, to come in Spain.
María Ángeles, how has been your perspective? You've supported the market since the very early phases through your foundation personally. Can you tell us how you've seen those, the triggering forces of this market?
Yeah, we've been lucky enough as to have a foundation as an ecosystem builder. So first, we decided to invest in the very early stage funds we found in 2017, 2018, where I think it was 10 million under management or so. So we are not flourishing, we're booming. And then with the funds doing their job, we also find there was a need for the academia to jump in, because we were doing something that was not written anywhere, especially in Spanish. So we support some universities in developing their papers, their task force, to get deep into what were we doing, where was the best practices in Europe, bring them here, also in Canada and Australia. And then we still support that, and we are very keen in the academia being part of the ecosystem. And then we started a little bit supporting entrepreneurs and supporting accelerators and so, but the market was really very mature when we came in 2018. So in terms of people trying to incubate or accelerate early stage social innovators, it was big enough. So I think what make our market boom, seeing all these actors and what you talk about, the readiness of investors and family offices and everything, were like two things you already mentioned. One, we were very small associations or funds or innovators being together trying to make a big systemic change. So it has helped us a lot to be working together, but really together, very intertwined. Or foundation or family office was investing in all the impact funds while we were launching our own impact fund. So it was very, this is one of the success, the key of the success we had. And on the other hand, the market in Spain is 70% SMEs. I don't know how many, but 15, 20%, they have a social goal when they launch their company. So I think we have a humongous opportunity in Spain. So as long as the European Investment Fund and the ICO, which is the Spanish branch that is helping the financial sectors to grow, jump in, it flourishes. So all these SMEs that don't know, maybe they were doing a social job, they discover that they were doing so. Even the climate change entrepreneurs were finding a place where to be funded that was new from the was before. So these two forces, the ecosystem working together for the same objective and the big amount of SMEs ready to be invested by funds. I think it was the two big forces that launched it, together with the money coming from Europe and the Spanish government.
And what do you think? Because Spain has a very long-standing tradition in the third sector, no?
Yeah.
Back in the days. How it has that influenced, and maybe in your strategy, perhaps, the type of companies you're targeting?
Yeah, so I think in Spain, foundations play a big role. Some of them, their endowments were investing in impact, so probably the first investors were coming from foundations. They were also supporting early stage innovations, entrepreneurs and things like that. And they are measuring impact, which I think is a very good thing that foundations do. They can fund the impact measurement for the investors not to have to pay this cost. And now we are getting like very technical into financial structures, and foundations can do blended finance. So foundations can support the early stage losses of a fund, the risk when we are entering a new sector or a new industry. So
we'll talk about that in the
that
future.
later.
How do you see it? Maybe the role in the future. But Pablo, you're in the growth stage. You're getting closer to the private equity mainstream world. Tell us a bit how you see that market nowadays, and how you interact with these players, mainstream players, as an impact manager.
So still, we see most of the impact ecosystem around venture capital are very incipient companies. Whereas María Ángeles said, like 70% of the world and 70-something% of the employment is coming from SMEs. Yet we do receive, or the sector receives, less than 14% of the alternative of private investments. So there's this big mismatch between the weight in the economy and employment and the funds they're receiving from investors like ourselves. And the potential of change is significant. So if we want to really inflict change in the society, we need to count on SMEs. Now, the way is how to approach them. So there's, in Spain, there's like over 200,000 SMEs. According to the studies, like 19, between Spain and Portugal is 19,000 high-growth SMEs. It's the third country in Europe after Germany and England. So imagine the potential that we have in Spain to invest in SMEs and really have a change in the society. Now, the thing is, how do you convince them to invest with us? Because investors are not usually well seen by the entrepreneurs. So we need to convince them that there is value in investing with us, in providing growth capital, in providing discipline in the decision making, in helping in transition situations. There are many elements that we can bring into the table and steer the growth of these SMEs into not only value, but also social and environmental solutions. And that's, I think that's something that the ecosystem is slowly achieving with more funds investing later in the growth or in the development of the companies, and probably more to come as more mainstream funds are approaching impact, no? As Ronald Cohen says. So everything will happen.
We see the move, no? Right, and the cultural change that is occurring, right? Alberto, can you give us a bit of a highlights of how do you see the energy sector in particular?
Absolutely. So, energy probably has a different context, right? So, energy 2-3 years ago, we had a very nasty wake-up call, right? So energy is about three things, the energy trilemma, right? So you need affordable energy, you need this energy to be sustainable, and you need this energy to be reliable, right? So 3 years ago, we had a very nasty wake-up call with complete loss of reliability on our energy sources after the Russian war in Ukraine, plus some tensions in Middle East or in North of Africa. So that created a very strong imbalance in the reliability, and that has an impact, obviously, on the cost of that energy, right? So immediately there was mobilization of resources around energy, right? So there was an understanding that energy was being weaponized, and particularly in Europe and in Spain, we realized that we need to overinvest in energy, right? So the context is slightly different to what you were describing. There is enough, I would say, funds today looking at the energy space, right? The challenge is going to be, okay, if we're going to make investments here, we'll need to return and make some profits down the road, right? And with the effervescence that we are seeing in the energy space, the big question mark is, are we going to be able to return all this money, right? Are we going to be able, once we put back the profitability very high in the agenda, because we managed to make the energy reliable and the energy sustainable, will the profitability or the cost of this energy have compensated the investments that we are doing today, right? We are seeing very large energy projects, and we are starting to see the limits of some of them, right? So it's not just about funds in energy, it's about how do we balance this equation, and down the road we find the profitability.
Excellent. Yes. I would maybe move now into what's next. Is this one-off? Is this sustainable? What do you think that are elements necessary for this growth to continue? I'll leave the question open for you to address, as you may do.
Well, I'm sorry to continue with the same. So I do believe that as impact investor, we have that responsibility and role to push the market and to be the innovators. So I do believe that we have been pushing the market already. The venture capital, maybe because they're also more pioneers and innovators, they were earlier and they started coming into impact investing with co-invested with quite a number of VC funds, and we see more VC portfolios being more and more impact, and them even embracing impact in the way they analyze things and the way they prioritize things. Now we're starting to see private equity firms that 6 years ago didn't even want to speak to us, come to us and say, hey, maybe we want to co-invest to learn what this whole impact investing thing is about. So I think our role is to keep moving the mainstream and pushing the bar. And if we think about pushing the bar, where we still need to push the bar is towards delivering more impact and do it in a more systemic way. So this is something that will be spoken about a lot this week. But we need to really, as impact investors, start bringing together all of the actors, start specializing more and more, going deeper into the problems that we're trying to solve, understanding them in a more holistic way, working more with governments, with foundations and NGOs, and working in a more multi-actor and systemic way to be able to deliver more impact and bring more value to the companies where we invest. So that's where I see the future going.
Any further notes?
So I would say my 3 key points are, 1, we need to develop success stories, a track record, and complete investment cycles so we could attract more investors and larger investors, and that would be an important catalytic situation. Then my main concern as manager is talent retention. Most of the funds are under optimum scale, and the ability to pay in the same terms or similar terms than other mainstream firms is critical if we want to do it well and attract the best people to the sector. And I forgot about the third. No, it's my obsession is about adding value. So we don't want just to buy cheap and sell expensive shares. We want a real, for us, the investment is kind of an excuse in order to help companies transform, and with that, transform not only sectors, but society. And as someone said before in the morning, try to change a little bit the conscience of not just making money, but it's something else for our lives, no? Which is kind of what we are aiming to.
Great. So maybe we can open a bit for questions, couple of them. 2 minutes, they're saying. One question, maybe even, not even? Yes, one, no? At least. Push, if any. There's one.
Hi,
Be
sorry.
brief, please.
Eleanor Cotterell again with Investing for Purpose. So my question's actually with regards to the corporates. We right now are working a lot with corporates by being able to do exactly as you said, opening up a network, being able to help them. But right now we're also seeing quite a lot of restraint from some of the major corporates. So we're seeing a lot of the newer corporates that have more kind of open-mindedness to be able to lend their network, their know-how, their warehouses, whatever. But what have been some of your tactics that maybe we could learn from to be able to lean on that more as we're developing other regions?
That's a very good question, and probably my answer is going to be disappointing. So first, my background, I used to work for GE and Siemens, right? So I was guilty of many of the sins that corporates make, right? So, and it's extremely difficult for a corporate to work with a startup. Even if they have the best intention, just the process, just the way to deal, the number of people that you need to mobilize sucks completely the capacity of a startup, and everything becomes a project. They just want to please you so much that they will customize whatever they have, and instead of building a product, they build a project, and this is where you kill the startup, right? So I think that is something that corporates become more and more aware, self-aware, right? That it's not the natural space. It's difficult for them to work with small companies, and particularly in terms of innovation and technology. So having, if you want, someone in the middle, a middleman that can help you moderate that and that can help you curate the type of relation that you're going to have is helping them, right? That's probably the first one. The second thing that we have seen working is, and that hurt our ego at some point, is that they are not there to talk to us, but they are there to talk among them, right? And they like the exchange that they have between them, right? They like to share their problems. They like to share in a very specific, not in a generic way, right? But in a very specific way, how are you solving this problem, right? And the problem that a big corporate has is in Spain is very similar to the problem that the same corporate has in Italy or in Colombia or in Norway, right? So this exchange amongst them in a specific topic is something that they value a lot. That is not to our credit, but we facilitated that. That's what we want to believe, right? So they found a space where they can find solutions that are enabled by this forum, right? And then one thing that we also try to be very clear with corporates is that they need to put some skin on the game, right? Otherwise, it just becomes one of the thousands of initiatives that a large corporate is going to do, and they are never going to kill, because nobody kills an initiative in a corporate, because that's failure. Nobody fails in a corporate. So you really need to put some skin on, you need to have them put some skin on the game. So someone is going to be accountable for taking out something, right? There are really a long list of other things that we tried that didn't work. I have more. The list of things that didn't work is longer than the things that work, but I think I'm going to be killed if I take more time, right?
Yeah. So let me just, I guess, wrap up. Thank you very much. I think we've managed, hopefully, to define kind of the GP models in order to provide value add in a market that is growing. Put some spotlight in the Spanish market. I will keep asking you more questions, certainly, but I would urge you to invite you to continue this discussion. I think the Spanish market needs internationalization as well. So it was a bit of the purpose, so that you know them, you see models, and please continue this discussion afterwards. Thank you.
You can stay just a minute. You can stay. Jaime, you can stay just 1 minute if I want. I just wanted to, sorry, you may sit for just a second. No, I just wanted to thank you. That was all. Just to show that I was listening, I was very fascinated when you talked about, I think, 200,000 SMEs, but the percentage who have a social role is incredibly impressive. So as you said, there is a lot there to get your teeth into. I just liked hearing, how can entrepreneurs see investors in a good light? Somebody said that, and that reminded me of Patrick in the previous panel when he said about speaking their language. There was something that sort of resonated there for me. And then I really liked what we didn't hear previously, but was about the success stories getting out there. Because I thought for me that addresses some of these issues around fragmentation of the market. Somebody talked in the previous or the first panel about a mindset shift needed for a better systemic approach. And I think, as we heard from Impact Europe, to attract more and diverse actors. So I'd say, yeah, getting the success stories out there. I think it was you that said it in the track record. Sounds like it's really, really valuable to me. But just officially, I wanted to bossily come up and thank you myself. Super interesting. Congratulations. And thank you so much to you for your lovely, delightful moderation. A round of applause, please. Thank you.